And good evening. This is the Elliott Wave update for the NASDAQ 100 for Thursday, April 21st, 2022. Again, a very, very interesting day. It is just that kind of a period that we're in the markets, transitional. On top of that, we're in an earnings season. On top of that, we're still having a lot of traders and participants in our markets that are not convinced that we're going to go down, that are still looking for a rally to pull us up all out of this, for whatever the reasons are, to be honest with you. But in any case, there's still all of this noise, basically, as I'm terming it, going on in the market. So let's get started, and let me start to try to unpack some of what I witnessed today, or how that affects the count, or how it fits in. First of all, starting again on the daily, which is the biggest picture that I'll show within our day-to-day updates, no changes, other than, you'll notice right away, I have put the minor 2 in place. And I'll go over that in a second, but I just wanted to show you that none of this has changed. In fact, we did, I believe, get some additional confirmation that the wave 3, the intermediate wave 3, of course, is already in progress, but now the minor third wave is now starting to kick off and begin. So it's going to get very interesting from here, because we still have the titans of tech reporting next week. And by that, I mean, we have Apple, we have Amazon, we have Facebook, we have Google, we have NVIDIA towards a little bit further. We have many others yet to come out through the rest of for the rest of the month of April, and then moving into that first and second week of May. So still a lot of reports to come, but the titans, they come out next week: Apple, AMD, Amazon, etc., Google, Facebook. All of those start to really unfold next week. We have Microsoft as well. So again, we have quite a bit. Now, let me take this down to the hourly chart, and let's just jump into today. Today was, folks, to me, an incredible market day. Come on. Let's just try and do this fair. There you go. See, if I do it nicely, it just rolls out and does it okay. So we started the day coming in after seeing Tesla's results after the market closed yesterday, took the stock initially up about 50. Then, as it cut overnight, it went up another, and then it went up 100. Then it went up a little bit more, and it just kept pushing higher as the markets rolled from Asia to Europe and then back to the US, with Tesla opening this morning up over 100 and pushing, and again, a little bit more and a little bit more. Then it's almost would seem that right after we got to this high, it was, because that was the opening. In fact, I'm just going to take this down to the 30-minute chart, open it up, and you're going to see there's the opening. The opening, we ran up to 14,283. And I thought, okay, we're on the way. We're going to finish this minor wave 2. And we're going to at least meet the minimum, which was 14,332, I believe it was, in that area, which was 0.382. And that would have been the absolute minimum, but it got up there. It's almost like somebody rang a bell, and they just started to sell it, and then they didn't stop, and then they didn't stop, and then they didn't stop, and then they didn't stop. So what ends up happening is the market just really began to collapse. Now, initially, I thought, okay, we had some strong buying, then we get some strong selling. They're going to come back. They're going to come back and buy it. They sold it more. They sold it more. They sold it more. It breaks the hourly 50, comes down, comes back down, breaks it again, and just starts to die. So here we are coming off. We got below the 4, the 8, the 20, and then the 50. We broke the 200 early, got above it on the open, then died when it collapsed back down through that 200. So again, it becomes resistance, but I'm thinking maybe this is just a little pullback. We're going to come back up and we're going to be okay. So I waited, got a little bit what I thought was a buy signal, went in, and then was like proven wrong very quickly. And there was not going to be even a little bit of a rally to get out of a long position, even as a day trader. So it was pretty much, you can see on the hourly chart, we have no green bars. So we have 1, 2, 3, 4, 5, 6, now into the 7th hour. So essentially the entire session today was down. After that up brief moment, then the balance was all down. And here we are basically forming a doji as we get ready for the after hour, finishing up here in about 20 minutes. And then we'll have Globex starting within an hour after that. So what does all of this kind of tell us? Again, I want to go out to the daily, and then I'm going to come back to the hourly chart so I can show you. We had this, and if you remember, as I left it yesterday, I said we need to leave ample room to the upside. And I had commented that the market had the potential to get up to 14,775 is where it actually was, I believe, coming in. That is where the daily 200 was. And then we had the 50, the 20, the 8, the 4, all bunched together right there. And they started to move up, and then they all of a sudden turned and they started to come down, and they did not stop. So look what happens on our daily chart. The 200 got a little bit more of an angle to the downside. The 50 immediately turned and is now heading lower. The 20 got back below the 50 and is heading lower. The 8 got back below the 20 and is heading lower, etc., all the way down. And here we got a little blurb on that rally, and then boom, boom. It's all pointing down. Now, I had left it yesterday. I'm going to stay here for just a moment on the daily. At 13,729.50, that was the low from the 18th. That was the low that marked the bottom of that minor wave 1, and from which we then launched the minor wave 2 counter trend rally. The market failed to even meet the minimal Fibonacci retracement that gets associated with the second wave. So I kept it open for 2 or 3 days. I kept open that possibility and the potential for the market to turn, to rally. We saw Tesla on the back of when Netflix had reported the day before, and just the stock got slaughtered. And so then yesterday, Tesla reports the stock rallies. So we get that opposite effect where, everybody's going to come in, we love it, and et cetera, that even Netflix went up a little bit today. And so it was very interesting. In any case, the market failed to produce that additional high. It equaled it today, but it failed to push to a new high. So minor wave 2, in my opinion, is ending in a failure. And with that in mind, that's why we got the strength of the decline that came in after that failure was impressive. It was very impressive. Now, I had to give it, in fact, I was thinking, wow, this is going to come down here, stop about here. We're going to go through expiration, which I think everybody was going to want higher anyway, blah, blah, blah. Well, it didn't. And then they just walked it all the way down. And then when it finally did break below 13,729, it broke. And it dropped below 13,700 and got down to 13,667 before turning and rallying back up. And except this is a little after the close. So it got down to 13,680, rallied back up. After hours, it dropped down to 13,667.50. And that was the sellers coming in and finishing up. Then they rallied it back up to where we are currently, still trading. We got about another 18 minutes. So it was very confirming, at least for me. So what could all of this be? Well, I got no serious chartable rallies. Even if I start to break it down and go to the 30-minute chart, let's see what we can see. I got one, I got two. So maybe I get a 1 and a 2 and a 3 and a 4 and maybe a 5 for wave one. For wave one of 3. So minute 1 of 3, because that's what we're doing. These were in the minor third. The first wave, it's going to consist of 5 waves of minute degree. And as I have been talking about, it is now going to prove true that this is minor 1, this is minor 2, and you can see failure. Outside of that, folks, outside of that, I'll be honest with you, I may end up moving the 2 over to here and calling this 1 and this 2, and that's the start of the third. But I'm expecting a very large third wave. So if anything, 1 of 3 of 3, 2 of 3 of 3, we're in that third, which does fit. I got to tell you, it does fit in terms of how I've described a third wave. Characteristically, it goes without any pity for anybody stepping in its way. It'll roll right over you in case if the market is going down, it'll roll right up over you if the market is heading up. The point is that a third wave carries the potential and the probability of being destructive in terms of price damage or price gain, and will just be relentless in terms of the pressure that will come in. So even though we had Tesla, everybody loves it, now they're all back on board. We had everybody coming in, okay, tomorrow's expiration, we want these levels. That just got squashed beyond being squashed. Now, if you listen to the pundits and the financial media, stocks turned lower on interest rate possibilities of a 50 basis point hike in May. Okay, well, they had to really search around and had to call all the people on the desk. What do you think? Why are we going down? Oh, interest rates, boom, click. And the reality is it's just like a combination of factors, a big combination of factors. The failure of the market to continue to break to a new high, the failure of it breaking back below the moving averages and not being able to hold them as support. That truly, as a day trader, was the reason. Interest rates, oh yeah, that's out there, but we're now trading price action. And unfortunately, a lot of algorithms is exactly what they're doing as well. So when you start getting where we're now selling puts, because that's where the premium's coming in. So, we might be buying a call, but they're selling the underlying. So these are all hedges, traders, rolling positions, changing positions, just realizing, oh man, I bought it up too high, I got to get out. And so they're starting to move, and then it just catches fire, and it just will continue with unabated and total destruction in its mind. So at best, at best, I'm likely going to move that 2 over to here. In fact, now that I see it, let me just go over this. Yeah, this was that strange, it could have all been an ABC, and we needed one more rally. So as much as I want to leave that 2 here, I'm afraid that I am going to do this. Again, because I could easily move it over, I can easily move it back, and I am going to put a minute 1 here, a minute 2 here, and we're in that in the beginning stages. In fact, I'll leave that off for right now because we're really looking to finish up. Where is this minute 1 going to come in? And I think that this is going to be a large decline. This is the decline that's going to cover and carry us right through all of these 13,000, 12,000, 11,000. I believe it's this third wave that's going to do it. So there's going to be some some news has to accompany that. Some forces have to start pushing in that is going to make it more obvious of the direction that we're going, regardless of what you're hanging your hat on, whether it's interest rates, whether it's, the dollar, whether it's the government, whether it's the failure of this, whether it's the Ukrainian-Russia war. Pick your poison, pick your choice. But when I'm moving into trade, again, as I tell you, all that noise stays on the outside. I am not bullish. I'm not bearish. I'm trading price action. And for most of today, the price action told me we're going down. And the market continued to attempt to rally. And you can see, even on the 30-minute chart, we had, out of the 6 hours, we had 2 30-minute rallies out of 6 hours. So, and it was a battle to do that. And they were fast, got there, and they just got, okay, we're on, we're done. And there was a response. Tried it engulfing, we bearish engulfing. Tried to get up a little bit, bearish engulfing. So these are strong messages, people. And this is what we need to really pay attention to in terms of what is going on in our marketplace. I'm not going to go out and try to figure out why they're selling. It's a waste of my time. And I'll tell you why. Because in order for me to do that, I have to stop trading. In order for me to do that, I got to go search reasons so that I can sell. Meanwhile, they've already sold everything, and now we're back in the bull. Now we're back in an upside move. So just trade. Price action against the moving averages, against Elliott, against previous lows, against Fibonacci, all falls into place. And you just have to trust what you're seeing and your picture. And again, I get it. A lot of people, they're just beginning their travels into the world of trading. And that can, bring a lot of doubt, bring a lot of fear. But if you have a methodology, if you have a trading plan, and that trading plan includes how you can get into the market, where you want to get in, why you're getting in on either a long or a short, why you're doing the trade, what your goal on the trade is, and where you'll get out. Where will the trade become invalid? Market will always tell you. You can hang on to that. Would markets tell me it's not going there? I think it is. Well, you can hang on and try to double down or do whatever it is you think you need to do and become a bigger loser. So, and here's the bottom line on having your rules, your methodology for trading. Do not break your own rules. Take it from me, from the voice of experience here. And I'm not talking one or twice. I am talking numerous times where I get into my fat head that, oh, you know better than the market. You know more than the market. They don't know what they're doing. When the position is going against me, double up, triple up, carry it. They got to turn it around. They gotta? No, they don't got to do anything. And the next thing you know, you're taking a big loss. You're losing a smaller account. You're backing yourself into a corner, and it truly, truly is not necessary. Okay, back to the matter at hand. I want to start adding, let's start adding Fibonacci to where we are and where I think we could go, so we can put some parameters around all of this. Again, not sure I'm going to keep that there, but that is the high. So, and then not by much. It is by $13, so it's not $15. It's not huge, but it might be enough. So I'll just switch it over here. And so first thing up, I am going to put some Fibonacci's on extensions to give us an idea on where this third wave can go. 305 is not going to cut it, guys. So let me just make a very quick edit because we already know that this is 2. 90. Did I say 90? Yep, 98. And let's see how that, yeah, changes it a lot. So we get our numbers right. So here we are now. This is taking the high from here. So if we got a 1 and a 2, and we're still maybe just working on that first 5 down of minute degree to form minute wave 1 of minor wave 3. This is all just coming. So from that level, I am going to count down 5. And how it fits in, that's going to come a little bit and a little bit. So 1, 2, we're coming off in the third. That third, or this wave thus far, has gotten down to 38.2% of the minor wave 1. So we've already retraced back down 38.2% of it. Now, as a minimum for this particular wave, 12,739, that is where the third wave would be equal to the first wave. We already know that conversation. That puts a lot of pressure on wave 5, because again, wave 1 was a nicely extended wave. Wave 3 is often, most often, the longest and the strongest wave. Therefore, it comes down to the point where this would only equal it. I don't think so. This is where wave 3 can finish up. Minor wave 3, minor wave 3, not intermediate wave 3, minor wave 3. Then we get a 4, and then we get another 5. And it's that 5 that's going to be bringing us down below 10,000 in my estimation. But now we're just working on the minor 3. So in the minor 3, we are looking for, or I am looking for, 11,775 in that neighborhood, plus or minus. Okay, so we got a lot still. We have a lot to go. But we were up 280 this morning, and we finished down 280. That's huge. We were down over 300 at one point. That's a huge turn. That's a lot of ground to cover. So what to expect for tomorrow? I don't believe that we have any earnings of note tomorrow, but it is an expiration. And today's slide lower took many of these big Titan stocks. Let's take a look. Amazon, well, let me just go over here just to quickly stick with me. I want to just show you. Amazon, 31.34, almost 31.35 is the high today. 29.51 is the low. That's a pretty big range. That's a big stock. It has strike prices all the way up and down. Okay, Apple, 171.53, 165.91. Big move in Apple. It was down over a buck today at certain points, and it was up over a buck today at certain points. So what we have, 165, 67.5, 170, 172.50, et cetera. Those are big expiration. Those are strike prices. Puts and calls. This will flow freely tomorrow. So again, as things shift both up and down, it changes expirations really quickly. So we had Amazon. Let me go back down. Facebook decided to just puke its guts out for another day. In fact, it went and it made a new low, a new all-time low, or 52-week low. Here we have 185.58. So it broke it by 30 cents, we'll call it. So, but still, it's a new 52-week low for Facebook, which began the week above like 225, 230. So they're already, and now just check it out, 188, and they're walking back in now and bidding things back up. Why? Well, either people are too short, so they're going to have to get the stock back in. They don't want to go overnight like that, or they're already starting to we're going to start pumping it up now to get ready for tomorrow. Don't know, don't really care. Here we have Google. Google, 2601. The low, 2490. That's a huge turn. That's all I'm going to say. IBM managed to stay higher today. That was the big surprise for me. Then we have Microsoft, 293, 280, $13 swing, high to low. Very large. These are big. Netflix, we already know. Netflix actually had a 211, made a new 52-week low over what it did yesterday at 211.52. And then came this thing about there's all these people hitting the internet. Where do I buy Netflix? How do I buy Netflix stock? And everybody wanted to get back in. They thought this was the bargain basement price. So here we are. That holded it. It stopped that decline, and they all started to jump back in and buy it. And here's one. They're marking it back down again. Okay, so these are all expiring stocks, folks. We have a $24 difference in NVIDIA. Big stock, lots of strike prices, et cetera, coming all the way down. Tesla today got itself up to 1,092. It had a low of 996. That's almost $100 back down after being up over 100. So, and they're stepping back in and buying it. So these are my points. We have a lot of movement. And so, and these are all stocks that expire and a lot of contracts at all these different levels. And so there's going to be a lot to play with tomorrow as well. So my take on tomorrow is we're coming in on our hourly chart. We are very oversold right now. So I'm waiting to see if I can get that call from some big firm saying stocks are extremely oversold because they want to push them higher. So that's worked several times before. It could work again, and it wouldn't be surprising to me. So in any way, continue to stay open as far as directional moves. Play it accordingly. If we get a bounce from here, which would not be unexpected, draw from wherever this bottom is to that high. That's going to be the next rally, will be maybe in the form of a small 4. If it's going to be in a small 4, you're looking at it, maybe it comes back to the 4, maybe it gets up to the 8 and then declines again. But from where we are, if it decided to go back to 884, that's a pretty nice rally. That's a very tradable rally. Why stand it out? And it's tradable also via options in particular stocks. So you can continue to do these things. In fact, there is the Qs, the QQQ. That's the representative index for options on the NASDAQ. Spiders for the one that's on the ES, but the ES also trades options, and they're very, very liquid. So there's a lot of things that can be done in whether you trade options, whether you trade futures, or whether you're trading individual stocks. There will be plenty to do. Just play the price action. Play it against what you now can learn and how to figure your support and resistance, how you can work out your Fibonacci's and where they're going to be, what waves are related to what, so that you can get your extensions down. Use these moving averages. So I think the downside is going to actually continue, but we need to bounce. So always allow for the bounce. It felt like today was just going straight down, but there were small bounces. They just didn't show up on those hourly charts. In fact, they didn't show up very much on those 30-minute charts. But if I went down to a 15-minute chart, you'll see that there were times where it was, and if I go down to my 2-minute chart, there was many tradable bounces and make a lot of money, make good money today. And again, today with the volatility and the volume, that it was not difficult. If you can just, when your trade becomes invalid and you're now down maybe $200 or $300, close the trade, take the hit. The volatility is strong enough and providing enough movement where you just need to reassess the market, where we are, what it's doing. Your next trade might be just to go short it again if you just got caught in a short, or to go long again if you just got taken out of a long. That's the market. But there's enough going on where you'll be able to make back your money that you just lost and then recover off of that. The trading was that good today. Trading was that good yesterday too. It's when we go into a low volatility time, and trust me, that's out there. It's going to happen. But right now, we need to take advantage of this volatility. Volatility is incredible. It is just incredible. And when we're talking about the price, the volatility in the future, that's the velocity of which that future is going to move. And we're talking about volatility in options. It's the premium you're going to pay for on top of the value or intrinsic or non-intrinsic value of that option. So for tomorrow, I do think we need to bounce, but we may not get it until we see additional downside as things roll from the US to the Asian markets and then then Asia to Europe. So depending on how our larger houses, JP Morgan, Morgan Stanley, Goldman Sachs, Citigroup, all of them, they have major trading desks in Asia, in Europe, etc. So orders can roll around the globe if they're big enough and the firms need to get the work done. So I can't tell you what Europe's going, how their reaction is going to be because they have their own markets to deal with and they have their own expirations to deal with. And the same with the Asian markets. So each one is going to take what's happening to us and then go in again and possibly make it to a little bit more to the downside. Now, continuing to move down, we have support at 135.18. We're starting to break down. You're going to start to see they widen out. Now, that was support, that was support, that was support. Now that we've broken below this level, where can we start looking for additional price support? Well, let's just go out to the 4-hour, open this up. We need to go left. We're back to the mid-March to try to find price support. Some at 680, okay. What else we got? We got some at 612. We have some at 486. We got some at 518. So there are price points, but again, they're just a price point. It could be a point where it'll bounce and it'll go up a little bit, but they're going to come back down. The overall trend remains down. We got reconfirmed of that today. The trend has not changed. We got confirmation today that this count remains in force. Wave 2, intermediate, we're in an intermediate third wave. There was no reason, none whatsoever, to change any of this. We had the potential that we could have gone up to 14,800 in the NASDAQ and still be in a wave 2. But we saw again today, it failed. It failed to break above moving averages that it needed to, so they continued to provide resistance. So leaving it all there. I mean, I'm looking for more downside, but I think we need to bounce first. And whether that happens in Globex and sets us up for the continuation of the decline, we'll find out when we get up and open our computers tomorrow morning. So I am going to continue to look for downside. Again, I'd be looking for the completion of the third, not the bigger third, just with this internal third, get another little rally and then another fifth wave to complete this third. I am looking down here. So we got a lot of downside to cover in terms of the minor third. So maybe this is just 1, 2, 3, 4, 5 for minute wave 1 of minor wave 3. Maybe that gets us down to here. Then we bounce in a minute wave 2. And then we get a minute wave 3, which will be the bulk. So yes, remember building blocks. I don't care what degree we're on, we got building blocks. Within this minor third wave, there are 5 waves of minute degree. Within the minute third, which we're not into yet, but inside that minute wave 1, there are 5 waves of sub-minute degree. They're building blocks, and we're going to have to go do all of them. And it's too early for me to tell. I'm going to go down to the 15-minute. It's too early for me to tell exactly what all this is representing. Right now, if they just jam this market up and go back above 13,900, I'm going to be left with 3. Can't break that one. 956, it breaks 956. Well, okay, I guess, what is that going to tell me? We've got 3 down. We're going to go back up. So stranger things have happened. I will work out all counts. I'm not worried about that. Remember, we must trade price action, trade what's in front of us. I'm not expecting something that high, but here you have 3 waves down. So I would be expecting a 3-wave rally. Here, this is on the 15-minute chart. You've got resistance at 738. Then it expands a little bit. Next resistance is going to come off of the 20 at 818. Then you're going to have 630 just as fib. And then you've got the 50 at 945. If we can start breaking above these on the 15-minute and start again breaking above them on the hourly, we have it at 884 is the 8 moving average. The 20 is at 984. So these things exist. These things are there. This is like, you can't deny them, and they will work. If it breaks and it breaks far enough, that's where it's going. That's the next one. If it breaks, that's where it's going. If it breaks, that's where it's going to go. Or they're going to attempt to get there. The market will always tell the story, and that's according to the moving averages, and according to our Fibonacci's, and according to the Elliott. All right, I'm going to leave it right there. Today was a great trading day. I am hoping that each one of you who listened had a great trading day. Please feel free to drop a comment, ask a question. I always respond. They take me a day, but I always respond to questions or comments that people need to make about, an understanding or what I think. So please feel free. Our next update will be on Sunday, the 24th. 24th? Yeah, 24th.